Most people think good investing looks like staring at screens all day, checking charts every hour, chasing the next big move. Mine looks like 5 minutes in the morning and then I close the app. It's boring, it's the most unsexy strategy you'll ever hear. And it's the reason I met my retirement number before I turned 30. All right, so let me walk you through the full life cycle of one investment. How I find it, how I get in, how I manage it, and how I get out. Now, don't get me wrong, I made the mistake that everybody does at the start. I started with the high risk, high reward type of trading. I was really brought in by the, fast paced, I love the excitement, the high emotions. I thought, this is for me. And I was really young at the time, so it kind of fit where I was at in my life. Ironically, the money was good, but the life was miserable because it's just you staring at your screen all day. Like high stress, like every decision makes a massive difference. Like, it's too much. It's not a life I enjoyed at all, and I wouldn't suggest it to anyone. Like, the reality was, I was going on family holidays, but spending the whole time in my room on my laptop. Like, I don't know about you, but that's not my idea of freedom. So then about 4.5 years into my trading journey, when I was trading full time, I really came to the decision. I was like, look, I don't want my life to look like this. I'm young, I want to enjoy life, I want more freedom. So I knew there had to be a better way to do it. And that's when I ventured into finding out what else could I be doing with my investing? How can I make this less time, easier to do, less headspace, and something I'd actually enjoy? And if I think back, the real turning point was the first holiday I went on with my partner's family, my partner at the time. So you're meeting the family for the first time on holiday with them, which is a big deal. And I'd spent probably 75% of that week in the room doing the trading, because like that was what was necessary to succeed with what I was doing. But I was like, come on, like this is ridiculous. I could even see myself like, what are you doing here? You're wasting a great opportunity, probably great memories, great experiences. But like that was the hole I was stuck in. So I thought, right, any type of trading that does need to take up all of my time is not something I want to do. Anything where I'm just thinking about it 24/7, dreaming about charts, like that's not what I want to do. So I realized rather than trying to get this high energy or like fast paced trading, I actually needed to go in the opposite direction. And I needed something slower, more calm, more relaxed, boring, if we're honest. And that's where the VAC strategy was born. Now, this strategy is perfect for anybody who wants to build wealth, freedom, more choice in their life away from their current career, but without having to spend hours on it every day, without having to create like a new part-time job for themselves. No, this is about somebody being able to build a life they're proud of in a few minutes a day. And honestly, if you're all sat there thinking, oh no, I want to be a full-time professional trader, I just want to have like 20 computer screens, like this would be the worst thing for you, because this is so relaxed, so chilled, so straightforward that you'd find it hard to spend more than 5 minutes a day doing it. So that's why I built it this way. Now let me show you what the strategy actually looks like when it's running. What I'm about to walk you through is the same system I used to hit my retirement number by 28. If you want me to go through it live with real stocks, I run a free masterclass at thetradetribe.com, link in the description. Now, let me show you how a single position works from start to finish. Okay, so the very first step, before we put any money anywhere near our investments, we need to filter through the stock market to find any stocks that meet our criteria. Now, when you're doing any type of investing, you have to have a strict criteria of what you would invest in and what you wouldn't. If you don't have that criteria, you are just gambling. So you've got to have a very strict criteria. Now, in the VAC strategy, we have what we call the fundamental 13, and that is a set of 13 specific criteria that a company has to meet before I would invest in them. So how I do this, I actually use a tool called finviz.com, and I'm going to show you on the screen here. So finviz.com, really cool website to use, particularly when you're looking for American stocks, which is what we're looking for in this example. So when you're on Finviz, as you can see, they've got like 11,179 companies on there at the moment. So lots to choose from and loads of different filters that you could filter by. So I would go through and plug in my 13 and find exactly what meets my criteria this week. Now, of course, I'm not trying to do this in like hours and hours and hours. I want it to be as fast as possible. So I've saved the filter myself onto my Finviz, my personal Finviz here. So all I do, this is my entire research. Click on my presets, I click the fundamental 13, it scans the market and bam, there we go. Down from 11,000 to 47 top companies this week. So super easy, super fast. So in front of me, I've got all the stocks this week that meet exactly what we're looking for. So I'm going to start off with the top one here, Nvidia, which is actually the largest company in the world right now. So when you click on the individual stock, it takes you to that stock's page. Ignore the chart here, it's nonsense, you don't need it. But you want to go down to these numbers down here. This is the data that we need. This is the one we're actually interested in. Now, obviously, way more than 13 bits of data on there, of course, but we're not interested in all of them. We're only looking for exactly what we're looking for. But just to give you a bit of an insight, so a couple of them that I think are really important. Firstly, the market cap. So the market cap is the size of the company. I'm a big believer in you shouldn't go for very, very small companies because they carry a higher amount of risk just from the get-go. So for me, I'm looking for anything above $2 billion. That's one of my criteria there. Now, Nvidia, 5,333 billion or 5.3 trillion. So they're doing okay. They meet that fine. So that would be a big one. So that's a good tick there on this. Another one I might look at is the PEG, which is the price to earnings to growth ratio. Really, this just shows you how well valued is the current stock. Like essentially, is the current price a good good price. Are you getting a good deal? Now we would want this to be under 2. If it's under 2, it shows it's either undervalued, too cheap, or it's appropriately valued. It's like a good price. Now this is 0.41. The lower the better here. So this is undervalued, so this looks like it's a good price. So great, that ticks that box for us. And then probably the third one I'd look at, one of my other 13, is institutional ownership. This one here, it says insta-own. This just means what percentage of this company are owned by the big guys, okay? The banks, the hedge funds, the institutions. So I'm looking for probably as close to 70% as possible. For me, that's like the gold standard I've found with this strategy, and Nvidia's got 69.22%. So, it doesn't get much more perfect than that. So this one is clearly excellent, and it actually does meet the rest of the criteria too, which is why it was on the list this week. So Nvidia looks like a great opportunity. Now, just to show the other side of what this could look like, if I picked a random company here. So this is Boston Beer Co. The ticker is SAN. Now, if I'm looking down here, obviously similar data points and all here, but if I look at just at that first one, market cap. So I said I'm looking for over $2 billion. Well, this one is 1.94 billion. Well, you might say, oh, that's quite close though. Is that going to be okay? No, it doesn't meet the minimum standard of our criteria. So I wouldn't even consider this. But I'm sure Boston Beer Co. is great. I'm sure their drinks are amazing, but it doesn't meet the market cap. It doesn't meet the first of the criteria, so it's out. That's how strict you need to be with the criteria. Now, the next thing I'd do is to determine, okay, so Nvidia looks like a good stock, but is it a good time to buy it today? So I would have a look at the chart itself. Now, I use tradingview.com for this. There's loads of different charting softwares out there, but tradingview.com seems to be pretty good for me. So I would look on here, the current price of Nvidia, and see how it's been moving. Now, as part of my strategy, I only invest in stocks that are dropping in price. Like, you don't want to be buying things at the highest price possible, which is where a lot of the beginners jump in. They're like, oh, it's been going up and up and up. I don't want to miss out here. They get FOMO. Or the higher something's gone up in price, obviously the higher the probability it's going to drop. What goes up must come down. That's definitely true. So you don't want to get in when something's rising. That's like getting it more expensive. Instead, I'm looking for a good deal. I want it to be dropping. Now, I have very strict calculations when I'm doing the VAC strategy, and in the Trade Tribe, we follow like a very specific calculator that works this out. But for ease and speed on this one for you guys, I might be purchasing this stock once it gets to, let's say here, and if it fell any further to this price, I might buy some more there, and if it fell further, I'll buy some more there. Okay, so you get the idea. We're buying as it drops in price, because, well, what could happen? The stock could either drop to that price, it buys the shares for me, and then it rockets up. Great, quick profit, amazing. Or what's going to happen the other 50% of the time? Well, I'm going to buy it, and it's going to keep going down. So great, if it keeps going down, I'm going to buy some more. I'm going to get a best deal. If it keeps going down, I'm going to buy some more. So you get the idea. We're buying as it drops to get the best price possible, the best deal. So you've got to see fundamentally strong stocks that are dropping as being on sale. Don't see it as high risk. That's what beginner investors do. If the fundamentals are good and it's dropping in price, that's a bargain. So let's go and set these investments here. Now, I'll get rid of that. So I've said, all right, when it gets to this price, so 206.87, this is where you're going to go to your broker, whichever broker you want to use, and place an order and say, okay, when it gets to this price, buy me this many shares. Now, the broker I choose to use is Trading 212. Lots of brokers out there, it's just the one that I prefer. So all you do on Trading 212, in the top right corner up here, you want to search for NVIDIA, NVDA, there we go. Click on that, and obviously we're going to click on the buy button, want to buy it. Now, there's different types of orders up here, market limit, stop and stop limit. Just to keep it simple, we're always going to be buying with a limit order, which just means when the price drops to this point, buy the shares automatically for me. That's all you're saying. So limit order. All right, what price did we say? 206.87. Okay, so you can set your order at 206.87. Number of shares you want to buy. Again, this will be dependent on how much money you have. In this example, let's just say I'm buying one share at that price. Then you click review order, you send your buy order. Great, that's set now. Now, what I would also do is set the next order down too. So let's say, okay, well, if it drops to 191.61, I'm going to buy some more. So let's do that. So I'll click buy, limit 191.61, and then it's time, because it's cheaper in price, let's say I'll buy 2 shares. Nice, right? So review order, send buy order, that order's placed as well. So you get the idea. We're just placing these orders up front. I'll do the last one just for completion. 175.54, buy, limit 175.54, and let's say we're going to buy 3 shares at this point. Review order, send buy order. There we go. All right, so those orders are placed now. There you go. You can see my pending orders. Now, this bit up here, it's actually some stocks I've already got on this account, so ignore that. These are the 3 we've just placed. You can see the pending orders there. So they're ready. They will stay there until the price hits that, and then they'll automatically buy for you. No matter if you're on holiday, you're at work, whatever, you just do it automatically. Awesome. So I'm going to fast forward the process a bit for your sake, so you don't have to sit here for a couple of weeks waiting for me. So these orders, let's say a few of them hit. Now, I've already got some Nvidia shares, luckily, as you can see on here. So let's see that where it says there, average price, which means when the stock is above that price, I'm in profit. Okay, if I was below that price, I'm in a loss. So 126.11. Well, if we have a look at Nvidia at the moment, you can see I've got the red line there where my average price is, or my break-even point, you might call it. And you can see we're well above, so we're in a really good amount of profit. And Trading 212 actually does a good job of showing you what profit you're in, which is awesome. But what I'm doing each day with my stocks, I'm not in there like placing new orders, moving things around, nothing like that. I'm just saying, okay, let me look at this in my 5 minutes. Has it dropped enough to buy more, or has it gone up enough to be in good profit? Today, Nvidia is in good profit. So I'm looking at this and I'll have certain targets where I've put my profit lines where I want to take the profit. For this example, I'm just going to delete these purchase lines now, just to not avoid confusion. Okay, so I'm in this amount of profit. What percentage profit is that? So above my average at the moment, I am in 74% profit on this. Great. Well, okay, rather than just saying, oh, 74% is enough, I'm going to sell immediately. Well, what I would do instead is put in a safety net. So a safety net in trade and investing terms is called a stop loss. Now, a lot of people use a stop loss to stop the losses, but obviously we all actually use it to lock in profit, to secure profit. Because rather than you just saying, oh, that's enough profit for me, I'm going to sell, well, that's an emotional decision, right? That doesn't mean anything in the market. The market doesn't care, with all due respect. So instead of trying to second guess things, all I do when I get to a certain amount of profit, I put in a stop loss. Then if the stock goes up, great, I can keep bumping up my stop loss. But if the stock drops, well, it's going to hit the stop loss and sell those shares automatically. So it's your insurance, it's your safety blanket. So in this example, let's just say I put the stop loss here. Amazing. So I know that in the worst case scenario now, if the stock falls, I'm going to get 70% profit. It's going to hit that, sell my shares and give me my profit automatically. Whether I'm at work, I'm busy, whatever. I don't need to be glued to my screen. And setting those is such a good way to make this very hands-off. That's my strategy. We've zoomed through it there because that's what it should take, right? We found the stock using the filters. We then decided when we were going to buy, place the orders, and then really you're just sitting back and waiting for it to get into profit, and then you sell. And your 5 minutes a day is literally just monitoring that. Has it dropped enough to buy more, or has it gone up enough to take your profit? Nice and simple, just how we like it. And because we've got 5 stocks running at a time, as soon as one of them gets to profit, that's when we do this, we sell it, and then we look to do the same approach on the next stock. So you're always trying to get to 5 in your portfolio. And then it's just rinse and repeat. Same thing over and over again. Now, by doing that and actually selling these shares and getting your profit, you get to benefit from compounding. Now, compounding is what Einstein called the 8th wonder of the world, and it's the secret to building wealth. But the beauty of compounding is it doesn't reward the impatient people. It rewards the patient people. Because the first few investments you do, you're like, okay, cool, I got a bit of profit. My account's growing a little bit, and you're like, fine. You don't really notice too much, just small jumps. However, when you stick to this for 6 months, a year, 2 years, 5 years, whatever, the longer you stick to it, you start seeing the returns look like that. You've probably seen one of those parabolic curves, absolutely rockets up without you even having to do anything different. That's what I really love about this. With most things in life, if you keep doing the same effort, you keep getting the same sort of growth. It's quite linear. With investing, it's very different because you start down here and then it rockets up like this. On my journey, when I was doing the day trading side of things, I barely ever noticed compounding because you'd always like putting small amounts on, loads of different investments, different trades, and you don't really get to notice the compounding as much. When I started investing like this, probably like within the first year of doing it, I suddenly noticed, hang on a minute, I started with doing only a small amount on each investment, and now suddenly that's like double, or like it's grown a hell of a lot here. So then you start saying, wow, this growth is significant, but the profits start growing with the same amount of work. Like, it blew my mind, but this is one of the reasons I love this. So that's the strategy. Filter, enter, manage, exit, rotate. 5 minutes a day. Boring by design, but here's the part most people don't think about. What does your life actually look like when you're investing only does take 5 minutes? Let me tell you what boredom gave me. So the bit I love about it is how it's so rinse and repeat. And a lot of people might think, well, that's quite boring. But while the strategy might be boring, what it allows you to have a life of is far from that. Because when your investments only take a couple of minutes a day, well, that gives you a hell of a lot of free time to do whatever you choose to. Like if I think back to my life when I was day trading, I'd be up early in the morning doing all my research, then I'd be spending hours in front of the computer, then I'd take a little break, then back hours in front of the computer, very high stress. If I'd had a good morning, I'd have to be really careful because I could get a bit too enthusiastic and make some mistakes. If I'd had a bad morning, the afternoon was probably going to get worse. So it was very, very high intensity all the time and really didn't get to rest. Whereas if I compare that to now, following this strategy, or in the morning, get up early, I like getting up early, go to the gym, come back, have a nice meal for breakfast, and then doing some work, stuff I enjoy doing. Then I'm just checking my charts quickly for 5 minutes. Then I've got the rest of the afternoon to do really what I want. And that freedom and that choice to do what you like, probably one of the most underrated and undervalued things I've experienced myself. Because people think of freedom as like, oh, getting to be able to do the big flashy stuff. Honestly, the peace of mind and the option to do what you want is way more valuable. So when I'd been following this strategy for the first probably 3 or 4 years, I got to a point where I was in a position to not work again, to retire, because my investments were growing at a rate that sustained my lifestyle. And that was a few years ago now. I was around 28 years old. And it was a really weird situation because I was like, oh, so I don't have to work. But when you get to the point where you don't have to work, it becomes really obvious to you what you really value and what you enjoy doing. Because for for me, I love teaching this. I get such a kick out of helping other people learn this stuff. So I suddenly realized, oh, I've got loads more time to do more of what I want. And that's really what freedom should be, because this idea of retirement, I think, is a bit outdated. Honestly, if you had nothing to do all day, you would be so bored, and it'll be the least fulfilling life possible. So rather than thinking that's what retirement is, it's just being able to do what you want, focus on the projects you want to do, things that are going to fulfill you. And I'm very, very privileged to that be my life now. The funny thing is, if I was still doing that fast-paced, exciting type of trading, I would never have the life I have now. I'd start checking my screen every 2 minutes, like dreaming about charts, like just worrying about my investments all the time. And it'd be miserable. Maybe the money would look okay on paper, but it wouldn't be a life I'd love. Whereas this strategy has given me a life I'm really pleased with, and it gives me all the freedom I could want. And that's what I think people are really looking for. They're not looking for a new job that's just going to take up all their time and headspace. They're probably looking for a bit of freedom, a bit of choice, and honestly a bit of peace of mind. And I think that's exactly what this strategy delivers. If you want me to walk you through the full system live, the exact filter, the entry rules, the exit rules, and real stocks going through the process, I run a free masterclass at thetradetribe.com. The link's in the description. If you want more from this channel, I've broken down each part of the strategy into separate videos. Start with whichever one is most relevant to where you are right now, and I'll see you on the next one.